Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Capital Advisory Group, Inc. is not affiliated with Kestra IS or Kestra AS. Neither Kestra IS nor Kestra AS provide legal or tax advice and are not certified public accounting firms.
You work hard for your money. For the next hour, you're going to learn how to keep what's yours. Capital Advisory Group presents Keep What's Yours. Here is Josh Gilbert and Jeff Zufall.
Hello and welcome to Keep What's Yours with Jeff Zufall. I'm Josh Gilbert, sitting here with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. Hello, Jeff.
Hi, happy Saturday.
And we are in the thick of it, tax time. And,
Yes.
you know, you're talking to me during the week and you're like, I don't know if I can even find time to get out and do the show this week. But we made time.
We made time,
And
yes.
then after the show's over, you'll go back to
Race
the
back.
office. And,
Yes.
and start crunching numbers again. Filing people's tax returns, that's what you'll be doing here for the next
Almost 2 months.
2 months.
Yep.
And then after that, you'll go somewhere and throw your phone in a lake. And
Ocean.
In the ocean. Maybe just
From the beach.
sleep on the golf course.
And that takes about 4 days to recuperate and realize where you're at and then go, oh, I am on vacation. So, yeah.
So you need to schedule a week away, but a week and 4 days.
Yes. Because
So
it
that
takes
you
4
can-
to realize where you're at.
Yes.
And then go, oh, yeah, I'm not doing tax returns
yeah.
anymore.
Phew.
Or walking around in a daze.
You know, someone's talking to you and there's numbers just going through your eyes.
Yes.
Yeah. Yeah. Sir, can I refill your drink? Threes and sevens. But that's where we are right now. And if you are in the process of getting all your stuff together, here's a couple of tips that we always say every week. We've been saying it for the length of time that we've been on the air here doing Keep What's Yours. There is a way to file your taxes and to redo what your paycheck looks like.
Yes.
Take advantage of health savings accounts, flex spending accounts. Is it flex? What's an FSA?
A flexible spending account.
Flexible spending account. That's what we
And
have.
not to be confused with an HSA, which is a health savings account.
Right.
Yeah.
But they do work very similarly.
They're close.
In that you can take money out of your paycheck pre-tax before the government has their grubby little hands on it. You can put it into an account, and as long as you're using it to pay for health care,
Yes.
and as long as if for an FSA like we have, as long as you're using it to pay for schooling,
daycare, there's health cares in there too. But that's more the difference between the two is an FSA is a use it or lose it typically. So if you say, I want to do $5,000, you got to spend the $5,000.
Sure.
There is a carryover to the next year, till March 15th and all that good stuff. But typically you have to spend it. Otherwise you do lose it. HSA just goes on and on and on. You're going to have health care expenses for your entire life. So if you have extra money in an HSA, keep it. You can use it for Medicare premiums. You could use it for health care premiums, way off at retirement.
So a lot of us are kind of familiar with that pre-tax IRA. It comes out of your paycheck before the government taxes it.
Yes.
It goes into an account. And when it comes to the IRA, at some point down the line when we go to take it out, that's when we pay taxes on
Yes.
it. But with an HSA, it goes into the account.
Mm-hmm.
And when we go to spend it, as long as it's on health care,
Yeah.
we never get taxed on it.
Never gets tax-free distributions as long as it's health care.
So here's how it works in reality, at least the FSA, which is what I'm familiar with. We sock away $5,000 pre-tax, and as long as we use that to pay for my son's daycare, we can use that full $5,000 and put it towards his daycare.
Yep.
Well, I'm going to have to pay that anyway.
Yes.
So if I don't have an FSA, then I'm taking $5,000 after taxes.
Exactly.
And paying for the daycare. And the swing, I'm able to use. I'm a 24% tax bracket.
Exactly.
At least I was last year. You'll tell me where I am this year.
Probably there too.
The swing is if I use pre-tax money, I get to use $1,200 that the government would normally get, and I get to use it on daycare.
Exactly.
So I am effectively keeping $1,200
$1,200 in your pocket. You can go to dinner. take your wife, go to dinner.
Right. And, it's not in my pocket. It goes to daycare, but it would otherwise have gone to the government. Then I would still have to pay $5,000 out of my pocket to go for daycare. So there are things out there for you to utilize. And that's what this show is for. And to tell you that these things exist, because the government ain't coming in and telling you that's for sure. They don't have – they're hiring a bunch of people at the IRS, but their job isn't to go to Josh's house and say, hey, we looked at your taxes and you could be doing a lot more. They're not going to do that. That's not their thing.
Yes. If they knock on the front door, run out the back.
Yeah. Call Jeff immediately. So the idea is we tell you that there are these things out there for you to utilize, and then the call to action is always – if you want to incorporate an FSA into your paycheck every 2 weeks, give Jeff a call, 636-394-5524. Capital Advisory Group out there. You're in Ellisville.
That beautiful downtown Ellisville.
Yes. We're getting our stuff together. My wife's like, let's go now. Let's do it. And I'm thinking to myself, let's wait a little bit longer to see if anything else comes in.
You should by now pretty much have everything.
Have everything.
Other than K1s. Those K1s, and then there's, and I won't say the name of the couple of brokerage firms that are going to have revised 1099 dividend statements. So that's your standard brokerage statements with your dividend income, your trades and all that.
They'll send you out a preliminary one.
Yes, but read it
and
close.
my wife is like, everything's due by January 31st. And I'm like, well, that's what it says.
That's what it says. But
we had a really tense conversation, Jeff, and I said, look, I talked to Jeff Zufall, who is a professional tax preparer, senior tax strategist, and he said, yes, in theory.
It should be, but it never happens that way.
But it's not.
Yeah. So just if you're doing your return, look at the front cover of your brokerage statement, and it'll say preliminary or it'll say not final. If it says final with a date, go for it. You're ready to go.
Yes.
But if some of them will say preliminary and are not final as of X date, and typically it's about the first week of March, second week of March, everything should be out there. Again, K1s are that wild card.
What's the K1?
So a K1 is a pass-through of some type of a partnership is the easiest way to explain it. So if you owned a real estate investment trust, some investment that has a pass-through of income or losses, a K1 is issued. But it's usually partnership scenarios if you own a business, an LLC, different stuff like that. But the culprit is dividend income that gets reclassified as capital gains or vice versa. And that's what twists everything up.
Yeah.
So if you got a K1 coming, you know you got one coming.
Sure.
So.
Well, let's kind of just tell everybody it's time.
Oh, it's time.
If you want to take advantage of an FSA or an HSA, or there's any number of other things that Jeff can look out there for you on your personal taxes. He specializes in small business as well. So if you're a small business out there and you need to, make the black go up higher,
yes,
and make the red, stop in its tracks or even retract, Jeff can help do that. And I don't want to say audit because that has a bad connotation.
No, it's not an audit by no means, but it's a way to analyze what you have going from a business standpoint. We see more and more small businesses and their attitudes are, hey, I got money in the bank, I'm good to go. That's not true. It's not a true representation on what's taken place in your business. And you need to be able to project into the future in a sense. To see, hey, this is where I'm at today. Am I really making progress going forward?
Yeah.
And that's what part of this, I say the bookkeeping, the accounting really help you do as you go forward.
And I was talking to somebody the other day, and they were telling me they run a small business, and they said, on paper, it looks like we should be making a lot more money than we are. Yes. And I said, well, I know this guy, Jeff Zufall. We do a show every week. He's a good friend of mine. And I said, who's doing your books now? And he said, my sister-in-law.
Yeah.
And it's like, I don't know what her training is.
There might be some good sister-in-laws out there that know bookkeeping in a sense and the accounting side. But
my dad ran pools in the summertime. He was a school teacher. Ferguson Florist at McClure High School. And in the summertime, he ran pools. And my mom did a lot of the books.
Yeah.
My mom is a science teacher.
Yes.
So at some point, it could be, if it's easy enough, you can have somebody responsible who can do there and crunch the numbers.
Yeah.
But if you're running a business that has hundreds of thousands of dollars at stake,
flowing through it,
and you're looking at the numbers saying we should be making more than what we are, that's when you stop and say, maybe my sister-in-law needs a little help.
Exactly.
And that's where Jeff can come in and look at everything. But like I was saying earlier, he does people's taxes and he does mine. Me and my wife filing jointly. He does my taxes. My mom's going to start going to Jeff. Heidi has been dragging her feet, and she says, "Jeff, I need." Jeff was in this week during the Heidi show, and once we went to commercial break, Heidi said, "I really got to come in. We got to do something." Because if you're not taking advantage of these things, you're leaving money on the table.
And you don't know what you don't know.
You don't know what you don't know. And that's what this show is, to tell you some of these things in the hopes that you give Jeff a call, 636-394-5524. Here's the thing, though. It's not that you're leaving money on the table. It's you're sending money to the federal government
that you shouldn't be.
Yeah. And they know that you shouldn't be.
They're never going to tell you overpay.
They're never going to. It's not there. You are a Social Security number on a piece of paper to them.
Yep.
So if you don't, I always thought that when I submit my tax return for me, the people at the IRS get it coming through the computer and they go, wait a minute.
Josh.
Josh is taking advantage of an FSA. Yeah. And then they go over to a bell and ding, 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 ding. We've got someone in St. Louis who's taking advantage of the tax code the way it was written. But they don't, it's just...
No, they have to climb over the boxes of paperwork that haven't been processed to get to that bell if they could even find it.
Right. So they don't, their job isn't to help us find these things.
No.
That's why Jeff exists.
They put them out and they enforce them. That's it.
And I got to tell you, I don't remember how much it cost to do our tax return last year. You do more for us than just tax preparation. We sit down and we visit you. I think it was 3 times last year, so it wasn't once a quarter.
Exactly.
But we've sat down a couple of times just to make sure that what we have going is working and what things we can change. But if you're helping me keep $1,200 just on my son's daycare, that's $1,200.
Yeah.
And we paid you, $200-300 to prepare our taxes for us. Number one, it's worth my time.
Yes.
To have someone else do my taxes because I can't do it.
Yeah.
And somebody else has got to do it. But going to you helped us keep $1,200. I mean, I'm coming out ahead on the deal.
That's right. Your bill's now $1,300.
Wait, how much money did we save you? So it's worth your time.
Yes.
It's worth your money.
I say that all the time is if you go buy TurboTax or one of these online, yes, you can do it. But what's that cost you? What's your time cost you to sit down, put all this together? As long as you just kind of don't bring me a shoebox of stuff. But round up your tax papers, bring it in. We can do it. You don't have to mess with it.
I always say my sister used to do my taxes for me. She used to do her own taxes. And she is brilliant. She has an advanced degree in mathematics, okay? So what do you always say about math? Math always wins. Taxes is just a math equation.
That's it.
But she had a couple of kids, and now she goes to a tax preparer because it's not worth her time versus money of what it would cost someone else to do it. She'd rather have the time.
Exactly.
And she could do this herself, but she's realizing, I don't want to be cooped up in the office, in the home office.
Sitting there trying to figure this stuff out.
2 or 3 weekends in a row, with the kids saying, can we go out and play,
And are then panicking going, is that right?
Right.
Did I get everything in there? What am I missing?
And like you said, you don't know what you don't know, so you're not taking advantage of the things that you've never heard of.
Yes.
And maybe you're filing things incorrectly.
Yes.
Which is going to hold up your tax return. Jeff filed our tax return. Last year, e-filed it. That's what the IRS wants. They don't want you to mail them any paperwork.
No.
They want you to e-file. And
3
days – yeah, paper is kryptonite. 3 days later, we got our tax return right in our bank accounts.
It's easy.
I was stunned. Stunned. So if you have someone do it and do it right, you'll get your tax return, maybe not in 3 days, but you'll get it a lot quicker. Than if you mailed stuff in or if you sent stuff in incorrectly and they have to go back and look at it. So it's not worth your time. Have Jeff do your taxes. 636-394-5524, Capital Advisory Group, CapitalAdvisoryGrp.com. We'll go to commercial break, but there's a bunch of stuff to talk about. I've got a whole page written in tiny print, all the things that you told me right before we started today. So we'll just hit them, and we'll give out good information and then remind everybody 636-394-5524. You saw the tax commercial during the Super Bowl of the guy dancing in front of the fountain, and it said, "Why do your own taxes when you can be dancing in front of a fountain?" Well, I don't know if I want to dance in front of a fountain.
Might be warm enough this week.
But there's other things I want to do besides do my own taxes.
Yeah.
So 636-394-5524. I do it. My mom's doing it this year. And Heidi Glaus says that she's going to do it too. Take advantage of Jeff Zufall and let him do your taxes and find some money. There's always something. If you're not doing anything,
on the table.
There's always something you're leaving on the table. We'll go to commercial break, come back, keep what's yours with Jeff Zufall on the Big 550 KTRS.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back to Keep What's Yours with Jeff Zufall. We are talking taxes, and it is tax season, so you need to start thinking about filing your taxes and maybe having Jeff do it for you. That's where we go. And there's also a bunch of news out there when it comes to the IRS and all of this stuff. I hate to say it, but, the business section in the paper, I never read it. And never, it was just like, that's for other people.
Says taxes, everybody turns the page and goes on.
Yeah. I'm like, where's the movie section?
Yeah, exactly. Give me something entertaining.
Yeah, fine. Where's the entertainment? I want to see, what Rihanna's up to.
Yes.
But the more I get older, the more I start doing shows like this and realizing that, do you pay taxes? Yes, everybody does.
Exactly.
All of this stuff pertains to me.
It does.
As a taxpayer.
Sometimes it's a dry read, but yeah.
Sure. But as an adult, as someone who's got money in the market, as someone who's got money in a 401k and a Roth, and I just went up to, I think, 7% in the Roth and 7% in the 401k.
That's it.
You told me just every year, boom,
1%.
tick it up.
Just
1%.
tick it up. Yep.
I took it up 2%, but
that's right.
I got half and half. And you told me, spread the money out.
Yeah. We don't know what tax rates are going to be in the future. The odds are they're going to be higher than where they are today. So maybe hedge your bet a little bit. A lot of people will say, oh, do it all after tax and you'll never have to worry about paying tax again.
And that's kind of where I am.
But again, you want the pre-tax side of the contribution to reduce your taxable income today so that you don't pay as much. So you kind of hedge the bet in a sense by –
And it's a game.
Yeah, it's a total game.
I hate to say it, but, it makes me sick when I think of politics as a game and people playing politics for their side to win. It's not about winning. It's about what's best for the country. But when it comes to our retirement, it's a math game.
It's a pure math game.
When do I want to pay the taxes and how?
And the Secure 2.0 that they just kind of put in play helps us even more, believe it or not. Really does help us even more.
So we'll talk about that in just a second, but I wanted to mention the real IDs, those IDs that have, the airports are scaring everybody. You can't get on a plane without a real ID.
Exactly, and you're never going to be able to do it.
And my passport is expired, so I need to worry about that. I'm pulling out my
I'm terrible at this because I kept blowing mine off to get my little star on it.
Look, I got a yellow star right there.
That's it. You're good.
I got a real ID.
You got
How
a
about
real
that?
ID. I've blown mine off. I was going to my license. I think I have to renew it here shortly. I thought, I'll worry about it then. But
I think it takes one extra piece of paper to get a real ID regular. Oh, I got to tell you this. So we were supposed to get these things by 2021 or something.
I think it was like 2020, and then COVID hit, and they said,
and they were like, oh, shoot.
Bit. Yeah.
So we got married, my wife and I, and she was trying to change her name. and get a new license because she needed to open up a bank account with her new name, and they wouldn't do it unless she had a real. And the lady at the DMV, God love them, they are not helpful at all.
No.
My wife, the lady at the DMV said, I can't give you a real ID unless you have this paperwork. And my wife's like, well, I can't get that paperwork from the bank unless I get a new driver's license. And they were going back and forth. And the lady keeps saying, I can't get you a real ID. And my wife doesn't know what real ID is. I look at the wall, and there's a thing that says real ID. And I say to the lady, hang on. What if I don't want a real ID? What if I just want a regular ID?
Yeah.
And the lady at the counter said, well, I can give you that one right now, but you're just going to have to replace it in a year. And my wife's like, I need it today
Yes.
to open up a bank account. She's saying real ID. My wife thinks that, real ID just means
not a fake one.
Not a fake one. And so, there was this disconnect, and nobody's helping anybody. Yeah. So this whole real ID thing, what a messy rollout. And,
yes.
We can blame COVID.
Yeah.
But,
still terrible rollout.
Terrible rollout.
Regardless of COVID.
But it was supposed to be 2020. COVID hits. They put it off. Now, when do we have to have
It's
one of
May
these
7th, 2025. So everybody like me that's sitting there going, I travel a lot and I need it, but you don't have to worry about it until 2025.
They're giving us 2 more years.
Yeah.
Here's the thing. I'm like, I don't know where I would stand on the political spectrum, but I think people, need to be forced into doing things from time to time.
Well, there's stuff that human nature. You're going to blow it off.
If they say you don't have to do it until 2025, then I'm just going to blow it off until 2025.
2025.
Stop pushing the goalpost.
I've traveled in early February, and the I guess it's TSA agent looked at my license and said, "Oh, it's going to expire. You need to get your real ID." I was like, "Oh, okay." And then just went on through the security line. So
yeah, sure, yeah. Well, you should tell. Well, lady, look,
exactly.
It's not until 2025.
I knew it was May of this year, so I was like, "Oh, I'll do it right after tax season. I'll get it done." So now it's going to be May 7th, 2020. Be May 6th of 2025. I'll be standing in line.
You got plenty of time. Yeah, May 6th of 2025 is. No, I say if this is the thing that we're going to have to do, then let's get it out of it. Let's get it over with.
Exactly.
I say May 6th, 2023. But then again, I already have it. So.
You have it. That's right. I'll just use your ID to travel, though.
Yeah. Well, then I'll use your credit card. I'll trade you. The IRS, Janet Yellen, they supposed to have a meeting.
Yeah,
Didn't happen.
2 weeks ago, Friday, IRS was supposed to, or Janet Yellen put a deadline to them that the IRS as a unit was supposed to show up and kind of turn over the spending plan for this $80 billion that they've received. And they would get $80 billion over the next 10 years. And they kind of didn't make their meeting, kind of an issue.
That's weird.
So they kind of pulled it and said, well, we'll work closely with the deputy secretary, and then we'll figure out what our next date is.
What is the Fed, and what relationship do they have with the IRS?
So the Federal Reserve is an independent body of the U.S. government, non-regulated by the U.S. government. And that's what freaks a lot of people out because they set our monetary policy.
Yeah, and they're like, well, who are these people?
And they can kind of act as they wish without any – it should be without any governmental
no politic wrangling.
Yeah, no politic wrangling. Nobody could really stick their head in there and say, hey – but that some of the Fed secretaries released some of the data to they did it to Biden, they did it to Trump, to say, hey, your numbers are going to be terrible this week, worry about it. And then they can kind of do their political angle to set the stage correctly. But Janet Yellen is the boss. So she's the she's the head chick, if you want to put it that way. And her the IRS is supposed to report to her from a budgeting standpoint how they're going to spend it. Not that she gives their blessing to it, but at least report to them to say, hey, we're getting $80 billion over the next 10 years.
How are you going to spend it?
This is how we're going to spend it. We're going to hire people. We're going to, upgrade our systems, et cetera, et cetera. Simple meeting, but they blew it off.
And people are kind of freaking out, depending on what aisle you sit on, depending on what media you take in.
Yes.
Some people are freaking out about the IRS getting $80 billion. Well, the fact that they missed their meeting to say how they're going to spend it.
Is the first step that scares us. So if you look at,
now I'm worried. I wasn't really too worried because we've talked about it, and they're just using it to update the systems, hire enough people to finally answer the phone calls.
So again, you sit back and you hear this, and you go, and then you look at last year's numbers, and they said that they answered 13% of all phone calls coming in the door. And their goal this year is 85%, and then they missed this meeting. And you go, what's going on here? Who's doing what? So it is concerning to a degree, but the $80 billion is probably a drop in the bucket for what they really need.
Yeah.
Now, one side of the equation says that $80 billion is going to be auditors. They're going to come kick in your front door tomorrow morning, and tell you owe an extra $100. There'll be a small degree of that, but I don't see that coming till. Yeah, it's going to take them a while to find 80,000 people, put it that way.
Yeah.
85 qualified people. So maybe in 4 years, yes, they'll probably have a lot of auditors that will scrutinize everything that you do. But again, that's what they're there for.
And that's what you're here for, is to make sure that I am following the guidelines of the tax code of the IRS so that nobody's knocking on my door.
Exactly.
And to say that they're kicking in the door of law-abiding citizens is not necessarily correct.
No, I don't see that happening. Now, and again, this is where they went after one of the other things we're going to talk about, the 1099-K reporting issue, that they've sidestepped that far. Literally, they're going to ask for public comment over the next 12 months. It'll probably come back next year, and depending upon how much of an uproar that the IRS takes or Congress people take, it may stick or it may not. The only reason that they really sidestepped it is everybody and their brother was like, wait, you can't do that. So
they announced this in
2 years ago.
Yeah.
And that was supposed to go into effect this year.
Just like the Real ID, kicking the can down the road.
So what they did was they put it out for public comment, if you want to call it that, but they're looking for anybody that, and there's people out there, I guarantee it, that are running businesses that run through PayPal. The concept was it's 200 transactions or $20,000 in revenue, and then it'll kick off this 1099-K. So the IRS just said, hey, they're going to kick them off for everybody. So if I send my kids $200 on Venmo, I'm going to get a 1099-K. Or if I sell something on PayPal and it's $500, I get a 1099-K. It's not fair. There is a workaround on the tax return. It can be taken care of, and you're not cheating or doing anything crazy.
Sure.
But there's people running businesses that will run it to $19,500, stop and go to another provider.
And that's one of these things that they're looking at. That's illegal.
That's
if
illegal.
you sell stuff on eBay, you should
report your earnings, expenses, profit or loss, and you pay tax.
That's the law. Yeah. And you always say, we follow in between the guardrails, driving down the highway of taxes. As long as you stay within the guardrails of the tax code, you're fine. You're good. No one's going to come kicking down your door.
They may ask a question or two here or there. You can answer it. Poof, no questions asked.
But if you're buying and selling memorabilia on eBay and you're using Venmo and PayPal, and this is a small little side hustle of yours, that you've now gone outside of the tax code.
You've jumped over the guardrail. You're running through the woods.
Right. So, you said that technically if I found $20 on the street,
you're supposed to report it.
I'm supposed to be reporting it to the IRS. That's ridiculous. And we might say, look, I just bought and sold something for $1,200. I'm not claiming that on taxes. That's ridiculous. But that's the law. Technically.
So if you had something in your garage, and you sold it for $1,000, the odds are you probably paid $2,000 for it. So you have a basis. You're not going to take a loss. You're not going to recognize a loss. You're just going to make that 1099-K go away. Mm-hmm. Easiest way to explain it.
So these are out there, and do I think it's ridiculous? Sure, I think it's ridiculous too.
Half the tax law is ridiculous, but you got to abide by it.
But you got to abide by it, and now what they're doing is they're hiring more people to look into these things
and kind of snoop around and say, you said you wrote that off, prove it.
Right.
That's again document. So from a receipt standpoint, make sure that you document everything, hold the receipts, store them in a digital format. Again, the other big thing is gas receipts. You know, the little thing you get off the gas pumps, copy them because they'll never last more than 2 months, and it'll just go away to nothing. And then you can't prove that you got gas or anything. So
Right. And if you want to say the IRS, if they really go through with this, they're going to start nickel and diming us for everything. Yeah, I mean they are.
They
but
will.
they're looking for revenue.
They're looking for revenue.
Has anyone realized how deep in debt we are? You know, have you seen the numbers recently?
$31.8 trillion dollars.
So they're trying to get as much as they can. And, you know, well, the last thing you want to probably tell the IRS is, well, I've been doing this for years and nobody's caught me. They'll say, oh.
Never say that.
How many years have
Exactly.
you been doing this? Because the IRS can go back as far as they want, right?
They deem fraud, they can go. It's unlimited. They go back as far as they want to go. Typically, it's 3 years. But if they go, if you underreport your income by more than 25%, that opens the door. Or if they say, hey, you said you've been doing that forever, they're going to go back and open up every year. They go back 10 years if they want.
And look, I worked in the restaurant industry for years, cash tips. Not everybody claimed them on their taxes. They knew what they were doing was illegal.
Yes.
So to complain if the IRS comes in and catches them, complain that they're getting nickel and dimed, you knew what you were doing was illegal.
Well, that's one of the IRS's first agendas of 2023 is unreported cash tips. So they're going after waiters and waitresses. Probably some of the restaurants, too.
Well, I got to tell you, both the restaurants I worked at were very diligent about making us claim everything.
Have to be because
they can be on the hook, too.
Yeah, because when the IRS shows up, the odds are that the restaurant owner is going to throw all the employees under the bus and be like, hey, they knew they should have done that, you know.
Right.
But again, that's one of their main things currently that they're chasing down.
You know, if a guy is walking out saying that was a great meal and slides me another 20, the restaurant doesn't know. I'm the only one that knows. You know, maybe I just put that in my pocket and
technically you're supposed to report that $20.
But you're
it's
supposed
like $20
to
that you
report
found.
it. And if the managers ever found out, they'd be like, you have to report that because they're sniffing.
Exactly.
They're sniffing
exactly.
now. So it's just one of those things. Is it nickel and diming? Yeah, but is it? Is it the law?
It's the law, and it's the real deal.
That's the law. Lawmakers, when they talk about taxes, we're going to go to break here in just a second, but a lot of big talk on one side of the aisle, tax the rich.
Yeah.
On the other side of the aisle, we're going to make the Trump tax cuts permanent.
Yeah.
Both big talk by both sides of the aisle, both not really going to happen.
Nothing's going to happen until 24.
Do not, here's probably something you can hang your hat on. If a politician says anything over the next 2 years, it's not going to happen.
We'll
it's
never make
just
it through.
Posturing for the next election.
Yes.
So don't think anything's going to really happen. You know, we got the infrastructure bill.
Yeah.
We got the Build Back Better Light 2.0, whatever they want to call that, the Inflation Reduction Act. That's done. I don't see us actually getting anything done for the next couple of years.
It'll be political infighting.
So most of everything that you hear is just talk because that's how they play the game.
Yep. Set the stage for 2024. So
anything that really is going to happen probably won't happen until 2025. I want to talk about the Secure Act 2.0 catch-up. I want to talk about some of that sunsetting things for 2025.
Yes.
The tax cuts in 2017. Paul Ryan got them through and then abruptly retired right afterwards. Shook everybody's hand. Congratulations.
Thank you.
Yeah, we made some big tax cuts. I'm out of here.
Yeah.
But those things are supposed to sunset in 2025. What do they want to keep going? What will they kind of let die on the vine? We'll talk about that and more. It is Keep What's Yours with Jeff Zufall. Are you trying to do your own taxes? Are you insane? I said my sister has an advanced degree in math, and she's like, I'd rather spend time with my kids She could do this. She could do her own taxes, but she'd rather spend time with her kids and have the weekends off, and I don't blame her. Yes. Jeff Zufall loves working on the weekends.
I do.
Especially this time of year. So give him a call, 636-394-5524. Don't bring in your shoebox full of receipts.
No.
Get a spreadsheet going. Put everything down. And if we need to go back and say, well, the IRS wants proof of that,
then we'll go find them.
Then we'll get the shoebox out.
Send them on their way.
But put everything on a spreadsheet. Normally that works good enough.
Perfect.
And bring your 2 years tax returns. Bring a couple of paycheck stubs.
Yes.
And Jeff will sit down with you and say, look, we can do this. I'll take care of it. You go home and have a nice nap on the couch.
That's right.
636-394-5524. And as the weather gets nicer, go play golf.
That's right.
Spend time with your kids. Go shopping.
Yes.
Because Jeff's going to find you some money. That's the name of the game. That's the name of the show. It's the name of the book that he wrote. Keep what's yours. Keeping more of your money in your pocket rather than going out to the federal government. We'll be back with more Keep What's Yours right after this.
Keep What's Yours continues with Josh Gilbert and Jeff Zufall.
Back on the show, talking taxes on a Saturday with Jeff Zufall, Senior Tax Strategist and Wealth Advisor with Capital Advisory Group. 636-394-5524. He can do your taxes. And if you're a small business, he specializes in small business. Make the profits higher, make the losses lower, right?
Something like
and
that.
That's the name of the game. High. Yeah, that's the name of the game. I had mentioned that the 2017 tax reform, the tax laws, the Trump tax cuts that some people called it.
Yes.
A lot of those things are sunsetting in 2025, but there was an alimony thing in there that we wanted to mention.
I don't know if anybody realizes this or not, but in the 2017 tax law, what they did was they took alimony, and it was prior to that, so divorce, separation agreements, so on and so forth. If the payer sends money to the spouse, it's not deductible, and then the ex-spouses don't have to report it as income. But in 2017, they flipped that. And now anything after, I think it's January 1, 2018, if you pay alimony, you take a deduction for it. If you receive it, it's clocked as taxable income. One of the things that nobody pays attention to is, one, that can be petitioned by courts, but you're up for a battle either directions. Because if somebody's paying it and they're getting a deduction, they're not going to go, oh, hey, I don't want that deduction anymore, but the flip side is the spouse is getting the income or ex-spouse is getting the income, but they're paying tax on it. So that sunsets in 2025. It's part of the package. That was a piece, honestly, I was not aware that sunsetted. I thought that law changed, and it was just, it is what it is. If you wanted to adjust it, you had to go back and hack it out in court. So sunsets 2025, we revert, unless they adjusted, we revert back to the rules that were in place December 31st of 2017. So where nobody deducts and nobody claims it as taxable income.
How about that? And 2025, the tax laws are supposed to sunset. Which side wants to keep them going? Which side are they talking about what's going to happen? I mean, 2025 is not.
It's not that far away.
It's not that far away, and we've got an election in 2024.
Exactly.
So, who's arguing what here?
Nobody's really even brought it up yet.
Oh, really?
I think they're going to let it just go down where it flips back to pre-2017 rules or pre-2018
come
rules.
Up with the 2026 tax reform.
Go from there. So that's kind of how it's set, is all this stuff sunsets 2025, but whoever comes into power in 2024, that's basically their hand is played. That's the first thing they have to go addressed, is all the sunsetting tax laws.
Yeah.
So
you had mentioned this. Privacy is a big deal. And one of the things that we use to combat thieves and impersonating us and trying to get our tax returns and before we can file them is that little PIN number.
PIN number is an awesome thing. PIN number, you have to PIN number and Social Security numbers. It all has to jive. and at the end of the day, then the tax return will go through. It's just an extra.
I can't file my taxes unless I provide the PIN number that matches my Social Security number. There's no way any thieves would have any access to that.
And it's renewed each year. It's
so it's not even the same one as last year.
Different one each year for every.
But you have to put in for this. You have to ask for a PIN
You have
number,
to ask
right?
for it to start, or if you were part of, a hacking in the past, you automatically get one.
Mm-hmm.
But then every year you don't have to ask for it each year; it's automatic. It'll send you a new one. They'll just mail you and your spouse a new PIN number each year.
I don't remember if we had one. I don't remember.
Should have had it by now.
Yeah.
It should have been out here shortly.
I don't know if we got a PIN number.
Yeah.
So
that's the good thing. Now the weird thing is there's this weird privacy issue that came out, and this was actually in November of last year is when it kind of raised its head. And what they're saying is, and again, I'm not going to name names, but there's 3 major tax software that you could do your own taxes on. And what they're saying is this website called The Markup reported that the 3 online tax filing firms, which I won't say.
The 3 major tax preparers.
You know who they are.
You know who they are.
Actually sent various taxpayer information to Meta. So they sent it to Facebook. So the question is why? And who did they send what to?
Right. That is weird. Why would they send our tax information to Facebook? And why did Facebook ask for it?
I don't know. See, they're not telling us that. But so there's a group of senators sent a letter late last year to the heads of Meta and these 3 tax firms, and they want answers. So you'll probably,
I would say so,
hear a little bit of the congressional hearings here shortly where they're saying why. I mean, it's a huge privacy issue. Now, is that they could create maybe averages of income? Who knows? But I can't see them sending real data like, hey, your birthday is this or your Social Security number is this. I mean, they violated every, Securities Protection Act out there that you have.
Yeah.
So, but that's just weird that this never hit the open media. Nobody said a word about it.
I mean, I'm hearing about it today. I just looked it up on my phone, and it dates back to like November 22nd of 2022. And just a couple months ago. So that's very strange. And I'm not a paranoid person when, they're sharing my data, which they do. Every company is sharing my data all over the place. China knows exactly who I am and what I make and all that stuff. I'm not naive enough to say, well, they're just using it so they can send me a particular advertisement to try to get me to buy
coupon
something
for next year's tax software.
But the idea of my tax preparer sending my tax information to Facebook, was that a box that I checked? Was that a box that I didn't uncheck?
Kind of weird.
It should be a prompt that says, "Boop, can we send your information to Facebook?" And I say, "No."
Yeah. Don't
and then
do
they go on, and Facebook probably paid, pretty penny for that.
Yeah. You almost think they'd have to.
Everybody out there wants your data, and they pay a nice price for it. So I guess any idea when Capitol Hill is expected to get some answers from these people?
They just said that they've sent the Congress, a group of senators sent a letter. That's all we know.
Great.
So
strongly worded letter. Hey,
Zuckerberg, we want to know what were you doing last week?
Get your butt back down here. And then if we did an RMD, 72 is required minimum distribution. If you got a retirement account, you need to know what this is. You should already know what the RMD is.
Yes. So if you turned 72 last year in 2022, that would have been the first year that you were forced to do your first RMD technically. But you could defer that first RMD till April 1st of the following year.
So of this year. So, I mean, I understand that if I turned 72 in December, which is very late in the year, I wouldn't want to be forced to start taking out thousands of dollars
hypothetically,
in a month.
Here's your issue: is the first one would have been due last year, so you would have paid tax on it. But if you push it to this year, you have to take that first distribution by April 1st of this year, which is still taxable income for 23, and you're still obligated to take your second RMD in the year of 2023.
In the same by December 31st.
Yeah, you can't push, push it off and keep it going.
I just have 2 this year
You'd
rather
have
than
2
1.
this year, and then you default back in 2024 to 1.
And I guess the reality is, if I know I'm turning 72, which I do,
Yeah.
chances are,
Yeah.
I know when my own birth date is. If I know I'm turning 72, I should have this on my radar
It's you
for a couple of years.
Trustee should send you notices, lots of notices, saying, hey, your RMD is due, here's the amounts. Now you got to be careful because a lot of these have gone to electronic format. So there's emails that are tossed out all over the place. So it might have been in an email somewhere, but at least look at your account. It will say your RMD is X. And on top of that, there's a form that comes out like in here usually by March, and it says it's what's called a 5498. And all it says is fair market value of your account December 31st of the previous year. It says it's an important tax document, has nothing to do with tax returns, other than it says on there, are you required to take an RMD? And a box will be checked yes. Mm-hmm. And it'll tell you
They'll
what
check
your
it
RMD
for you.
is. Yeah. So if you get one of those, pay attention to it. Most people think it's a real tax doc and give it to us for, like we're going to prepare tax returns with it. We don't need it.
Yeah.
It's fair market value to you.
And the fine for not taking your RMD. And look, when you're turning 72. This isn't something like, I forgot,
So it was
tough cookie.
It was in the past 50%, mm-hmm. And now
so if my RMD is $1,300, it'll be
$750.
The fine would be 50% of that.
Yeah, 50% of that.
So and that doesn't go to me.
No,
it's not like you have to take out more. That goes straight to the IRS. That is a fine. That is a tax on a tax.
Plus the tax on your $1,300 that you had to take out. So it was 50%. They've now dropped that to 25%, starting 2023 and beyond. And then if you catch it and this is the joke, in a reasonable manner of time, there is a definition which I read and I laughed at because it really doesn't tell you what that. It just kind of says a reasonable amount of time. So if you're 3 months into the year and all of a sudden you go, hey, I didn't take it, I got to fix it. You do it. You should be able to get it down to 10%.
Yeah.
And in some cases, if you're older, you had medical issues, you're in the hot. There's all kinds of crazy reasons on why you missed it. It becomes a letter writing campaign to the IRS asking for forgiveness.
Yeah.
And as long as you've been compliant the last 3 years, they usually will waive it. They're human. They get it. But if you do it consistently, habitually, they'll probably say, no, you got to pay it.
and like the person that works at a restaurant and is getting cash tips and they're just putting it in their pocket and not claiming, what you're doing.
Exactly.
So it's not be naive here. If you're turning 72 and you have a retirement account, you should know at 60
that it's out there
that this is coming out there.
Yeah.
This should be part of your retirement plan.
There's weird stuff though that happened. Like in one case, they received the notice, and they thought they took it, but they didn't. And the email might have said, "Hey, we need more information from you," or something to that effect. And they never gave them more information. The RMD never went out.
Yeah.
So now we're working backwards trying to fix that, which I don't see an issue with it. But
so if you turn 72 in a calendar year, you can push that first RMD off until April 1st, but just keep in mind that same December 31st, you'll have to take another one. You owe 2 that year.
Exactly. That's the
issue. It's 6 in one, half dozen the other. As far as I'm concerned. Keep what's yours with Jeff Zufall. That's all the time we have today. 636-394-5524 if you need help with your RMD. If you are 65 and you know it's coming, then let's prepare for it. Not really much you can do once you turn 72. It's coming out.
Yeah, it kind of comes out. No.
Coming out. You got to do it. But, you can plan for the next year and the year after that and the year after that. Not much you can do as far as your 2022 taxes go. Now, what's done is done. It's in the past, but you can always prepare.
23 and beyond.
23 and beyond. What can I do this year? We're only 2 months 3 months into the year, we can do a lot more with our paychecks to make sure that our tax liability, our tax that we owe the federal government is as low as possible. Give Jeff a call at Capital Advisory Group, 636-394-5524. He can do your taxes this year and help you save money next year.
Yes.
Keep What's Yours with Jeff Zufall. Thank you so much.
Thank you. See you next week.
You've been listening to Keep What's Yours with Josh Gilbert and Jeff Zufall, Senior Tax Strategist and Wealth Manager at Capital Advisory Group. To learn more, call 636-394-5524 or visit CapitalAdvisoryGrp.com.